Welcome back, everyone, to another exciting episode of our channel. Today, Robert Kiyosaki is the brilliant mind behind Rich Dad Poor Dad, and today we're diving into the 6 basic rules of investing with a focus on OPM, other people's money. Let's kick things off with an essential concept, OPM, other people's money. OPM is game changer when it comes to investing. It's the idea of using other people's money, such as loans, to invest in assets that generate income. This leverage can amplify your returns and accelerate your wealth building process. However, it's crucial to use OPM wisely, manage the risk, and understand that not all debt is created equal. Moving on to the next fundamental principle, there are 3 primary types of income. The first is earned income, which is the money you make by trading your time and skills for a paycheck. The second is passive income, which is generated from assets like rental properties or dividends that don't require your constant effort. Lastly, there's portfolio income, which comes from trading or investing in stocks, bonds, or other financial instruments. The goal of successful investing is to shift from relying solely on earned income to building and growing your passive and portfolio income. This shift provides financial freedom and the ability to live life on your terms. Education is a recurring theme. Let's start by explaining why getting a financial education is crucial for investors. Financial education is the foundation for making smart investment decisions. It's about understanding how money works, the various asset classes, and how to analyze investments. Without proper education, you're more likely to make costly mistakes, like investing in something you don't fully comprehend. I always recommend that people continuously educate themselves about money and investing. Learning about different asset classes, understanding financial statements, and keeping up with market trends are essential components of a solid financial education. Let's move on to the idea of investing for cash flow. Why is this approach so effective? Investing for cash flow means investing in assets that provide a steady stream of income. For example, rental properties can generate rental income, or dividend-paying stocks can provide regular dividend payments. Cash flow investments can create financial security and allow you to cover your expenses and enjoy your life without being tied to a 9-to-5 job. It's a fundamental principle of financial independence. Your investments should generate enough cash flow to support your desired lifestyle. This approach allows you to break free from the paycheck to paycheck cycle and gain true financial freedom. There is a common misconception that investing is inherently risky. The idea that investing is risky comes from a lack of financial education and a misunderstanding of the different types of risk. In reality, not investing can be far riskier. When you don't invest, your money loses value due to inflation over time. Investing allows you to grow your wealth and outpace inflation. Furthermore, proper financial education and understanding of the investments you make can help you manage and mitigate risk. Diversification, due diligence, and using strategies like OPM can make investing less risky than most people think. Raising capital is often a significant challenge for aspiring investors. How can they overcome this hurdle? Raising capital can be a hurdle, but it's not insurmountable. To raise capital, you must be resourceful and creative. You can start small, possibly with your own savings or by using OPM wisely, and then use the gains from your initial investments to fund subsequent ones. Networking is also critical. Building relationships with potential partners or investors can open doors to capital. Crowdfunding and seeking private investors are additional avenues to explore. Remember, the most important thing is to have a solid investment plan and a track record of successful investments. When others see that you can deliver results, they're more likely to invest in your ventures. Now, let's share some real-life examples or stories that illustrate these principles in action. Let's take a common example. Suppose you want to invest in real estate, but you don't have the full purchase price for a property. You can secure a mortgage or a loan, OPM, to buy the property. Then you rent it out, generating passive income. Over time, the rent you collect can cover the mortgage payments and other expenses, providing you with positive cash flow. As you gain experience and build a portfolio, you can leverage the equity in your properties to raise capital for additional investments. The process repeats, and you build your wealth over time. These principles apply to various investments, from stocks and bonds to businesses and intellectual property. The key is to start small, educate yourself, and gradually grow your investments using OPM and cash flow strategies. Remember, anyone can master these rules with dedication and a commitment to learning. Your financial future is in your hands. If you found this video helpful, don't forget to hit that like button, subscribe, and share with your friends and family. Their journey to financial independence begins with knowledge and action. Until next time, keep learning, keep investing, and keep building the future you desire. Goodbye.